Okay, so thanks for coming tonight. My name is TK Kugler. I am the managing partner of Wasabi Ventures Stallions, and with me is George Adams, who is our director of Bloodstock and Stallions, and we're going to walk you through the Wasabi Ventures Stallions 2021 fund overview. And this is going to be, I think, for many of you, interesting. Some of you are old hat at it because you've actually participated in other stallion offerings that we have done, other breeding stock offerings that we have done. But for some of you, this is the first time hearing about something like this. And really, we are the only people that I know of in the world that have a venture capital style fund structured around thoroughbred breeding assets. And we're going to walk through it tonight. And once again, at any point, feel free to ask questions, use the chat functionality, and I will try to, I'll try to get to those. So without further ado, let's jump in. The first thing to notice is that there is a legal disclaimer. You know, I put this in here, one, because I have to legally do that, but I also stop and talk about it. Most of the time when you get legal disclaimers in the world, you kind of gloss over them. But the reason I bring up and I show this screen is to really accentuate the point that this is an actual financial instrument. We are actually using a piece of the SEC law, United States SEC law, to create a venture capital fund. So we are governed by a set of laws here. So this is unlike some maybe other things that you have participated in the thoroughbred world. This is much more as if you were investing in a true financial instrument with the primary goal is financial returns. Of course, we try to do education and transparency and all those things so that you can have a great time while you're doing this. But the real point is that we're trying to do this so that we get a return on investment for not only ourselves, but also the investors involved. So what is it? It is a venture capital fund where all of the assets are thoroughbred breeding assets. And for those of you who may not have ever invested in private equity or venture capital, it is, and I'll really stress it, maybe the way to best explain it is that we're investing in assets, in thoroughbred assets, as if they were startup companies. And we're trying to invest in those so that we can appreciate in value. It might even, for many of you that participated in other financial instruments, it might even be akin to looking at a mutual fund and the way a mutual fund gathers together stocks or bonds and puts those under one umbrella, and then you get the benefit of having a piece of all of those. Very similar concept. For those of you who may have never participated in a venture capital fund or private equity fund. So what are thoroughbred breeding assets? And you'll notice that there are two colors here. I put the two colors in really so that I put the two colors in just so people, for those that were in part of Fund 1, we only really utilized the first two. In Fund 1 last year, when we raised it because of COVID. We were very delayed. Wanted to start it much earlier in the year, but COVID, like many things, put things on hold. So we waited till much later in the year, and we decided to raise the fund at the very end of the year. We're starting it at the beginning, more in the middle of the year, which is when we'll raise all of these funds. But we only had the first two: shares of stallions and lifetime breeding rights in stallions. Shares in stallions are just what they sound like. You have a stallion that goes to stud. Usually you're dealing with freshman stallions, doesn't have to be, but often you're dealing with freshman stallions that we use our connections and our efforts to get access to, and we're able to buy a percentage of it, just as if you would buy a percentage of a company, and we're buying a percentage of a stallion. The second thing is what's known as a lifetime breeding right. Sometimes you'll see it abbreviated as an LBR. And it's very similar to a share in stallions, except that they usually cost less because you actually don't own the actual stallion. You're not buying a percentage of the stallion. What you're buying is just what it sounds like, the lifetime right to breed to that stallion. And so it's an asset in and of itself. And they usually cost less than a share of a stallion. They also don't come with ongoing expenses. When you have a share of a stallion, you get a bill every month or quarter to pay for the upkeep of that stallion. Lifetime breeding right doesn't come with those. But you also, and the way a lifetime breeding right makes money, and we'll talk a little bit about that soon, is that you sell those breeding rights over time. So we'll talk more about that in a second. The two in green we did not do last year, mostly because of timing of the year and the size of the fund that we raised. Both 3 and 4 require a greater amount of capital to do, and because we were starting the fundraising later, we didn't have those. I'm putting them in green this year because my intention is that we're going to have at least the option of possibly buying a full ownership of a stallion. I want to leave that open. And I also want to leave open the possibility that we're going to have broodmares in here as well. So that's what breeding assets are. And I'm just going to take a quick second. I see I've got some. And yes, this is just Joe Reimer asked. Yes, this is fund 2. We'll get to that in a second. But how do the assets earn a return? So shares of a stallion, you get usually what happens is you get an annual dividend. And once again, we're talking at the fund level now. So if you're a part of a fund, you get an annual dividend, just like you would on a stock, if you will. What the stallion earned for doing breeding. The second item of it is you get to sell those seasons. Usually when you buy a share of a stallion, you also get some of those benefits that I talked about with a lifetime breeding right. You get X number of breedings per year. Sometimes it's 1, sometimes it's 2. Sometimes it could be more, but it's usually a 1 or a 2 situation. And then you can sell those breeding rights. And then obviously, since you own an asset here, when that stallion is sold, you get your pro rata percentage of it, just as if a company was sold. Lifetime breeding rights in stallions. So I talked a little bit about it. You can sell the seasons. You can also sell an entire LBR. This year in Fund 1, we were actually buyers of existing LBRs. We bought 2 seasons of Jimmy Creed, I believe. And George, we bought a season of Painter, or did we buy?
We bought a share in Painter, and we bought 2 LBRs to Jimmy Creed.
Yep. Okay. Correct. So, there's a secondary market for LBRs is the way to think about that. And then mares and foals, you sell the mare, and sometimes you sell the mare who may be in foal to a stallion, and we could actually have a mare with one of the stallions that we have an asset of, and you sell that as a package, and you get the proceeds from selling that. You could sell the foal just as an individual, and you continue to hold the mare. The interesting things about mares is that they have a bigger ongoing cost, because you have to feed and care for that mare and the foal until you obviously have a liquidity event on them. The other thing that's interesting around mares and foals is depending on where they're placed, you can have regional bonus programs. For those that have participated in Wasabi Ventures Stables broodmares and offerings, you know what these are. There are states like the state of Maryland or the state of New York actually give you bonuses as those foals grow up and run. You can actually earn sizable bonuses, and that would go back to the original owner and the original breeding right, even if you don't own the horse anymore as it runs and wins a race. So that's really what those are. So that's how assets earn a return. So let's talk about how the fund is structured. Now, for those of you who have participated in private equity or a venture capital fund, this is going to be probably something that you're very familiar with, because we're using very standard structures here. So we're set up as a Delaware Series LLC fund. So it's a limited liability corp fund in a series. So each year, each fund, if you are in that, you will get issued a K-1 on the activity of that year. And we try to work very diligently. I use the same staff that I use in the venture capital world to get K-1s out very quickly and on time, even if the federal government decides that they keep changing the laws over time. But we do our best. We are doing an annual fund with distinct assets. So just so everybody understands what that means, if you participated in last year's fund, that fund is its own distinct set of assets. There's no carryover into this fund. This will be a brand new fund with a different set of assets. It doesn't mean we may not go out there and buy another lifetime breeding right to Jimmy Creed if we can find one. George was just actually talking about that today, that he's doing so well, and if we could get it at the right price, it's a good asset to have, and that breeding right will be in this fund. But it's really distinct assets. Think of them as, I used to tell people, it's like vintages of wine, right? So each vintage of wine is its own distinct thing, and really each fund is a distinct fund. It is structured as a 10-year fund, a 1.5 and 20 fund. For those of you that don't know what that means, basically there is a 1.5% fee that sort of covers the cost of actually running this. There are hard sort of costs to running this. Believe it or not, George requires me to pay him when I run this. So, but there are, and we got to pay legal and compliance and accounting and all kinds of things. But that goes into that 1.5 fee, and the 20%, the 20 fund part of the fund is a 20% carry, a carried interest. And what that means is, once again, let's say there is $100,000 invested, and $100,000 comes, and $200,000 comes back in returns. We're just keeping the math very simple, just to explain carried interest. The 20% of the fund means that the managers of the fund, Wasabi Ventures Stallions, as a management team, gets 20% of the profits of the returns before the next set of profits. So on that example that I just put out, if $200,000 came back, $100,000 would go out back to the investors, whomever they may be, on a pro rata basis. We would take $20,000 as our profit for doing this, and $80,000 is then distributed pro rata. That's a simple way to look at carried interest, and a very simple example. But that's basically sort of how it works. Neil asked a question about the annual amount. Yes, it's an annual amount, but it's a 10-year fund, so it's all taken up front. So you don't pay it. That's an important question, actually, Neil. The way it's structured, because we're talking about a relatively small amount of money, there's no capital calls in the future. No one's going to call you and say, hey, you owe more money. So there really is, once you have invested, there's no chance that you're on the hook for any more money or any fees of any kind. Whatever your investment is your investment. We actually take the fees out of what you invest over time in sort of a pro rata basis over the years, is the way to think of it. But you don't get a bill every year. There's nothing. Sort of very similar to, if you want to think of, once again, trying to bring this back to things that everyone might understand, is a mutual fund. There are fees wrapped up in a mutual fund. You just don't, it's not like you get a bill and you have to pay them. It gets just taken out over time. The next bullet is important because this is key. The SEC law that we are governed by means that you have to be accredited and or qualified to participate. Now, the SEC has been changing the rules around a lot on this. If you can look up, you can just Google what an accredited investor means and figure that out if you're accredited or not. For you to participate, that you do have to be accredited. One interesting tidbit here is that you can demonstrate expertise or knowledge, investing knowledge. This is really put in place to protect people so that they're investing in things that they know about, right? It's not, it's to use the old colloquialism, it's not stealing from old folks and orphans. This is, it's meant to be people who are investing in something that they know is high risk with the potential of high return. And so you can demonstrate, if you are a participant in Wasabi Ventures stables and you have participated in breeding assets over there, you qualify to be accredited here, even if you don't financially are accredited. That's you demonstrating that you are on the inside and have a knowledge. So for those that may be on the phone and not financially accredited, they would qualify under that accreditation. This year, the minimum is a $5,000 investment. Once again, there's no other fees. You won't get a bill next year saying, hey, you owe some kind of money to pay for something. It's none of that comes. And there's a $5,000 minimum and a $250,000 maximum. Our target this year is a $750K to $1 million fund. We won't stop at $1 million, but I like to be forthright to understand, so you understand kind of the size of the fund. If we get up near that $750 to $1 million range, that's when you'll probably see us. If we get over 750K, you'll see us starting to participate in a few broodmares. There was a question someone asked, how is this different than the Wasabi Ventures Stables broodmare program? Once again, well, one thing, the Wasabi Ventures Stables no longer does broodmare offering. So, but the bigger difference here is that these will be truly investment grade broodmares that we're shooting for. These will be things that we're looking at auction in that $30,000 to $50,000 range, and something that is a little more asset driven for sure. So that's probably one thing for those that may have participated in other broodmare offerings in the past with Wasabi Ventures Stables. And once again, feel free to ask questions about the fund or the structure or any of that as we go on. But I'm going to jump forward. History of Wasabi Ventures Stallions. Yeah, there was a question earlier, is this just the second fund? Yes, it's only the second fund. We actually started in 2019 by buying an individual stallion. That was the start of Wasabi Ventures Stallions. We bought a stallion named Force the Pass. Many of you, I saw the names on, actually were participants in the syndication of Force the Pass. So we bought Force the Pass and placed, and it was a fully owned stallion. We jumped right into the deep water, if you will, and sorry about that. I thought somebody was trying to join. We jumped right into the deep water and we started having a full stallion. And George did a magnificent job sourcing the stallion and marketing him that first year. We really went all out. We got 45, 50 mares, maybe more than that, to cover, for him to cover. We stood him in Maryland. We sold quite a few breeding rights. And then magically, 1 year to the day, almost from the day we bought Force.
Almost, it was 1 year to the day the agreements were apart.
Yep. So 1 year to the day, we got an offer. We were able to close on an offer to sell Force the Pass to Saudi Arabia for $500,000. And so that yielded a 3.69 return for the investors. And I put in here that the returns are still coming. This is probably news to some of you on here who were investors. You were tickled pink with the big return that you got and the check that you got when we sold him. But once again, one of the great things about stallion assets and breeding assets as a whole is they continue to return dividends even after you sell the assets. So because we have foals hitting the ground now, we are getting payment checks for those. So so probably within the next month, some of those investors who were in Force the Pass are actually going to start getting some dividend checks for some of that. So so it really is, it really is meant to be an ongoing instrument that produces revenue over a 10-year period, and it could last even longer than 10 years if you have the right stallion assets. But we structure them as a 10-year fund. So that's really how we got started. We really crushed it, honestly, on the first stallion. So we took all of that we learned, all of that we put together, and said we want to build something that's never been done before. I kid you not. I don't know of anyone who currently is operating a true venture capital style breeding assets fund and doing it in a legitimate fund structure kind of way. We are truly doing something revolutionary. So the first fund was last year. I'm actually gonna shut up for a second. For those of you that know me, that's not the easiest thing to always do, but I'm gonna let George give some updates on the assets that are in Fund 1 and how they've done. So George, take it away.
Yeah. And there was a question in the chat. So it's too early to have a sort of specific asset by asset review at this point of that first fund. We will get numbers later in the year as to how many mares some of the stallions or all of the stallions that we have shares in. We'll find out how many mares they covered during the year, which will give us an idea of what we might expect for an annual dividend next year. It'll end up depending on how many live foals actually get born to the stallions, as opposed to the number of mares bred. Obviously, that's not always the same. Every mare that's bred does not produce a foal. But so basically, the short answer is it's too early to have actual numbers. Having said that, we bought a share in Painter for Fund 1 for $8,500 earlier, just before Nick's Go went out and won the Breeders' Cup Dirt Mile, and before Harper's First Ride won the Grade 3, or just after he won the Grade 3 Pimlico Special. Nick's Go came back and won the Pegasus earlier this year, which generated enough buzz for Painter, and he was booking well enough that they upped his stud fee from the originally advertised $7,500 to $10,000 for this season. And the last time I touched base with Windstar, they were right around 90 mares booked to him and hoping to get over 100. It's a 50 share syndicate. Every shareholder is entitled to breed one mare on their share at this point, which basically means at least 40 to 50 mares to go into the pool for the shareholders above and beyond the mares bred on those shares. So we should hopefully get back. We sold one. We sold the one season we have for $5,000 live foal. We did that early on before his stud fee had gone up. And we should all, and that mare is in foal. That is not a Wasabi mare. That is a third-party mare. And then we should also be in line to get somewhere between $5,000 and $10,000 from the additional mares bred to him, depending on, they advertised him pretty heavily earlier this year because he was doing very well. So the advertising budget for him will be pretty high probably, but we should still get a decent return off of that. And between the stud fee that we will get for the mare that we booked ourselves and the additional mares, the pool of mares, we should more than pay for that share by the middle of next year when the stud fees are collected and they get around to the accounting. We bought 2 lifetime breeding rights in Jimmy Creed earlier this year for the first fund. He just last weekend on the Belmont Stakes undercard scored his first grade 1 winner as a sire. He's one of the top 10 2-year-old sires already this year, with his biggest and best bred crop of 2-year-olds at the races this year. And in the last 2 days, Wesley Ward, who is an American trainer who sort of pioneered going to Royal Ascot from the US, he has done a couple of interviews and has touted a daughter of Jimmy Creed named Coffee Maker as his likeliest winner. And it's a filly Coffee Maker, and he's running her against the Colts in the Group 2 Coventry Stakes at Royal Ascot next week, which is a race that has not been won by a filly since like 1908 or something like that. And just given how Wesley Ward is in her last workout, she will probably go off favored in that. They bet ahead of time over there, and she is currently head of the market for that race based on what Wesley Ward has said about her. So that's very good for Jimmy Creed. The chances that his stud fee will increase next year and going forward is high based on what he's done so far this year. At the very least, it's not going to go down. Let's see, of the other assets, we bought a lifetime breeding right in Instagram, who's a freshman stallion. He, when I had last touched base with TaylorMade, was booked to 190 mares. At that point, I'm sure it's over 200 at this point. Because we only have a lifetime breeding right, not a share, we do not get the added revenue from those additional mares above and beyond. There is no syndicate, it's just lifetime breeding rights. Larry Best did not syndicate him, but that bodes well for the horse's chances at stud. And again, this is a 10-year fund. It's not all about making the money back right away. So with 150, 200 2-year-olds from his first crop to hit the races, the chances that Instagram is the leading first crop sire in 3 years, or at the very least close to the top of that list, is relatively high, which would make that lifetime breeding right worth a good bit more down the road. We bought a share in a horse called Gift Box, who is from the first crop of Twirling Candy. Gift Box was a grade 1 winner himself. Twirling Candy has gone on. He's now the sire of this year's Preakness winner, Rombauer. Continues to be a young stallion, sort of on the rise. His stud fee is up to, or stayed at $40,000 or $45,000 this year, when most stud fees were cut at least a little bit. He had done enough not to do that and was booked full. You couldn't even get to him if you had wanted to at $40,000. And now that he has a Preakness winner, that will probably go up, and you still won't be able to get to him. So that bodes well for Gift Box. Gift Box's chances as well, and his popularity. Let me just check the questions here.
Yeah, and I'll handle the last question, George.
Okay. Well, that's the only, I think.
Yep.
Okay.
Super. That's one thing I wanted to highlight as George was going through is, and this is an important understanding, and if you noticed it from the Force to Pass, I switched back to this slide. Notice it that in 2019, we purchased that. So before you, and this year, so we're in 2021, that's when some of those financial returns start to come back. Now, once again, we sold Force to Pass, but short of selling an asset, liquidating an asset, and getting the profit from that kind of transaction, the returns on owning breeding assets take, it's usually a 2-year cycle from the time you buy to when the returns start coming in, because obviously the foals have to be born, and that's what creates the return from either selling lifetime breeding rights or leasing them, I suppose, the way to think about it, or getting your stallion share payouts. It just takes a 2-year cycle. And then once it comes in, it becomes like a flywheel, right? Because then every year after year 2, in theory, you've got results. And really the goal of most assets is that, just like anything, they appreciate in value, and you can sell them for more money than they're worth. And the beauty of a fund and this is important for you to think about too, as you think about this as a true investment asset. It really is built so that you've got fund dynamics, meaning you've got multiple assets in multiple places. We're going to actually take a look at the assets here from Fund 1 in 1 second. But let me jump to Laura's question in your example about the carried interest. No, Laura, it's actually $20,000. The way carried interest works, and remember, if you remember in the example, the simple example I gave where there was $100,000 invested and $200,000 came back. So basically there was $100,000 of profit. Carried interest only happens on profits, not the overall number of the dollars returned. So investors always get their money back, including any fees, before there would be any chance of a carried interest. So if there is no returns, then there is no carried interest. So there's no floor here. There are funds that exist like that, not in any way in this fund. The investors get their money back before anyone else. It is very important for you also to understand that I am a personal investor in the fund. I will probably be the largest investor in the fund. So I am right there in with you betting. And George is an investor in the fund. We were both investors in Fund 1. I was definitely the largest single investor in Fund 1. And I'll be close to it in Fund 2, if not the largest investor in Fund 2. So, and I'm investing under the same terms that you are. If there are no returns, I don't give returns either. So it's not like there's anything magical happening. I'm in there, right there with you. And so is George. And that's important to understand because I have a personal belief, this is just TK's opinion as a lifelong venture investor, never invest in a fund unless the people investing are also investing with you. That's key to me. So I just want to show, I'm going to flip over very quickly here. This is the Wasabi Ventures Stallions site. And so if you look here, we have a page and you can see this. These were the 8 assets that were in Fund 1. And you can see the sort of interesting pieces that we have there. We talked about some of those, Painter and Jimmy Creed. We have Honest Mischief. We talked about Giftbox, Instagram, Higher Power, Fog of War, and 1,000 Words. What's interesting, and I want to highlight here, everything in there except for Painter and Jimmy Creed were freshman stallions. And that's really when you start betting on stallions and you start getting those lifetime breeding rights and those shares, you really are betting on the future. We're trying to pick assets that we think are going to go up in value. George did a fabulous job getting us into Instagram. It was not the easiest thing to pull off, to be honest with you. We've been very, very, I will say I feel very fortunate to have George and his abilities to work the network and get us into assets that you probably would not be able to get into on your own, is really quite special. One other thing, just so the next step for anyone out there who might see this is for you to come to Wasabi Stallions. It's just wasabistallions.com. You can see that up here. If you go to wasabistallions.com and register, that's where it all starts. The fund is actually open today. We already have $100,000 in commitments. It's opened early this morning, and our first $100,000 has already been committed to the fund. So you could go in. It's all completely digital and electronic. You can review the documents that are in there. There's a full PPM. There's a full offering documents. There's a full operating agreement for the LLC. You can choose how much you'd like to invest, and you can sign and wire all at the same time. So we've really built it to be a seamless process for you. But it all starts with you creating your accounts. Anyone can create their accounts and go through the process from there. But that'll be the only way you can invest in the fund. So hopefully tonight gave you a really good feel for what we're doing, what makes this unique. I think we have a really good chance to do something really interesting this year with Fund 2, and getting into assets that'll be even more interesting than what was in Fund 1, given the size of the fund that we'll be working in. So I hope you all decide that this is an alternative asset that works in your overall portfolio, and that you can come along with the ride for us, with us. That would be fantastic. Any last questions from anyone before we call it an evening? Okay. Well, thanks everyone. If you register, this is important, if you go and register at wasabistallions.com, you will by tomorrow morning get a copy. You'll be able to get a copy of this recording and this presentation that was done. So both of those things will be possible for you, and they'll be shared right on there. So thanks everyone. I guess one last question. Neil asked, could the offering close before 10/1? Really, the only way the offering would close before 10/1 is probably if we reach, $1.5 million. I'm going to cap this at $1.5 million. If we get that to that level of commitment, honestly, I have a couple sovereign wealth funds in the Middle East that are thinking about being a part of it. So Heidi asked, so that would be the only way it would close beforehand. And then Holly asked, the 2021 assets are listed on the website. There are no assets yet. So we're at the very beginning stages where you're investing, and then, we'll go out and get the assets probably later in the year, sort of standard venture capital fundraising at this point.
Well, and Thoroughbred or Stallion timing also, there's nothing to do right now. When the Stallions start sort of retiring in the fall, later in the year, that's when the assets will tend to be available. We actually have feelers out already on a couple of horses who have either retired or have had stud deals announced, but because we're a ways out from breeding season, a lot can happen between now and then. The stallion owners wait longer before they decide what the terms will be. So we have expressed interest to stud farms in a couple of horses that will be hopefully assets in Fund 2 eventually, but there's nothing official that could be done even if we wanted to just yet.
Correct. Okay. Well, thanks everybody for coming tonight, and